Most traders lose money. Why? It's because they don't actually understand market structure. Market structure, or MS, is the foundation of all price action trading. It helps you set a higher time frame bias, find your points of interest, execute setups, and even manage your trades. Even if you're not a market structure trader, understanding the high time frame structure will massively improve the odds of your setups working. The problem is most educational content out there makes market structure seem complicated, full of jargon, and is not actionable in practice. In this video, I'm going to show you a simple, effective, and easy framework you can use right away to analyze market structure and trade smarter. So what is market structure? Well, the market can only do three things. It can go up, making higher highs and higher lows. It can go down, making lower highs and lower lows, or it can be going sideways. So this would be obviously an uptrend, this would be a downtrend, and this would be a range or chop or sideways price action, okay? So to figure out which one of these we're in, I always suggest starting on the highest time frame. The high time frame is going to have the best signal to noise ratio. So you're going to go to the high time frame, and then we're going to determine our swing lows and our swing highs. The way that I do this is using a 3-candle swing system. So 3 candles make a swing high or swing low. This is what it looks like. So a swing high would be a candle like this with a higher candle in the middle, and then a lower candle to the right of that. Okay, so notice how we have 3 candles here. You have a high, a higher high, and a lower high. 3 candles make a swing high. And then the inverse of this obviously would be a swing low, where you have a low, a lower low, and then a higher low. Again, 3 candles make your swing low. So we're going to go on the high time frame, and we're going to try and determine, are we in an uptrend, a downtrend, or are we going sideways or chopping? So in an uptrend, we're going to be seeing consistent higher highs and higher lows, right? In a downtrend, we're going to be seeing consistent lower lows and lower highs. Sideways, ranging, or choppy price action is generally when you can't actually discern what the trend is. Here's a higher high, but then it makes a lower low and a lower high, then it makes a higher high again. This is range-bound, choppy price action. So what does this look like in the real world in practice? So let's go to the weekly chart here on Bitcoin, and we can very clearly see that Bitcoin, for a significant period of time here, has been making higher highs and higher lows. Here is your 3-candle swing low. There is your 3-candle swing high. Here is your 3-candle swing low, and here's your 3-candle swing high. And now Bitcoin is trying to put in another swing low here. So if price is able to push up above this swing high and make a fresh higher high, that will prove that we have continuation of this uptrend. And what this would be called here is a break of structure, or a BOS. Some people call this an MSB, but effectively it is continuation of the prevailing trend. So a BOS to the upside tells you that price is continuing in that uptrend. If we're in a downtrend, perhaps like we were back here in the bear market, you can see we have a 3-candle swing high, 3-candle swing low, 3-candle swing high, and we broke structure here to the downside, BOS. That's telling us that this downtrend is going to continue, and you can see that's exactly what it does. So what does this mean when it comes to a setup? Well, if we're in an uptrend and there's been a recent break of structure, so like we have here, what you're actually going to be looking to do, right? You have a break of structure here. You believe that the market is going to continue. So you could call this a continuation setup. We're going to have an expectation that the market continues higher. We're going to be looking to buy a pullback, expecting that this trend, because we had this break of structure, is going to continue. So those continuation setups are looking for a pullback and then a continuation of that prevailing trend. So in this instance, we had our break of structure to the upside, and then we have this nice weekly order block here. We're looking to buy that pullback, expecting continuation to the upside. So in an uptrend, a continuation setup is waiting for the break of structure to the upside, and then you're looking to try and find where the next higher low is going to form, assuming the uptrend is continuing. And then again, another break of structure. Where's the next higher low going to form? And so on and so forth. The inverse, obviously, on a downtrend. If we are trading lower and making lower highs and lower lows, we just had a break of structure to the downside. I'm going to be looking for a pullback and trying to determine where the next lower high might form, expecting continuation of this downtrend. And again, an example of this in practice here, price is very clearly in a downtrend here. We had a big structure break there, lower highs, lower lows, and then we get a pullback right into that bearish order block, continuation of the downtrend. So that part should be pretty straightforward, but trends don't last forever. When they exhaust, market structure shifts and there might be evidence of a reversal coming. So this sometimes can be referred to as a change of character. In simple terms, the market stops trending the way it was before. So what does that actually look like? If the market is bullish, we're making higher highs and higher lows. And then all of a sudden, price, after making a higher high here, it's got to break a structure. You think things are going to just continue up. But then the bulls lose steam and price has now actually made a lower low. This would be called a change of character because it's telling you that, hey, this trend might be changing. We might be actually seeing a reversal, a change of character from bullishness to bearishness. And then price ends up bouncing. It makes it a lower high. And now, boom, we've had a break of structure to the downside. We are now downtrending. And so instead of looking to long pullbacks, we might be looking to sell pullbacks because prices changed characters from bullish to bearish. So a change of character is a clue that the trend might be reversing. Obviously, the inverse would be true for a bearish move if we're making lower lows and lower highs, and then all of a sudden we make a higher high. This would be a change of character here because we changed characters from being bearish, we were breaking structure, making lower lows, to now making a higher high. All of a sudden, there's a reversal opportunity here, and the market is now bullish. You can see the market here is uptrending. We had a higher low, a high, another higher low, a higher high, and then this higher low had a break. This would be a change of character. And now the market has switched from being bullish to being bearish. And so instead of looking for continuation longs, because we're in an uptrend, we now are going to be looking for reversals. Price is going the other way. We're now saying, okay, this is actually breaking structure to the downside. I might be looking to short a pullback. So now we've covered both uptrends and downtrends, showing when there's continuations with breaks of structure to the upside or downside, and also changes of character when the market maybe is uptrending and it reverses and now it's downtrending and vice versa. The last thing to cover here about the three directions of price is obviously range-bound price action. So what is that? That's simply when you do not have a discernible trend. I would consider, for example, this to be relatively range-bound price action on Bitcoin because we have a low and a high here, and then all of this price action that goes on here is contained within that initial swing point. So when you can't discern a clear trend, there's a good chance that price is ranging or chopping. It doesn't mean that you can't trade this. There's actually complete strategies, which we'll share in other future videos, on how to trade price when it's ranging. The tricky part about ranges is you don't know if price is going to continue in a direction or it's going to reverse. Oftentimes you get this ping-ponging between the range low and the range high, whereas in an uptrend, you're expecting every high or low to continue higher. And in a downtrend, you're expecting every lower high to continue lower. Whereas in a range, you might think, oh, we're actually going to start going up now, and then we get towards the range high and price fully reverses. So we'll do another full video on ranges in the future, but to keep it simple for now, if you cannot clearly tell if the market is making higher highs and higher lows, very clearly, very obviously, there's a good chance we're range bound. Now, in both cases, whether you're looking for continuation or you're looking for a reversal in the market, the signal is a market structure break. But the trigger is waiting for the corrective pullback. That way you can enter close to your invalidation point instead of chasing the market and getting chopped up. This is where patience is going to pay. Let the structure signal you, then wait for the market to come to you. So again, when price is breaking structure to the upside, we're not going to chase a long just because it's broken structure to the upside. We're expecting continuation. We're going to wait for the pullback and get that most optimal entry at that point of interest, whether that be a breaker, an order block, a fair value gap, etc. And again, I'll do an entire video in the future covering the different types of POIs that I use in price action. So to summarize, you need to use market structure to identify the dominant trend. If we're in an uptrend, you want to be focusing on longs. If we're in a downtrend, you want to be focusing on shorts. Map the highs and lows on the higher time frames, and then focus your low time frame trade ideas based on the trend of the high time frame. If you get a break of structure, wait for a pullback and trade in that trend's direction. If you get a change of character, wait for a pullback and trade against the previous trend because the market is reversing. If it's trendless or messy, step aside or use range-bound strategies. Again, I'll cover that in another video. This way, you're always aligned with the high time frame flows, and you massively boost the probabilities of your setups working without chasing the market. So this is a very basic and easy to apply framework for market structure. It's not meant to be complicated. It's meant to keep you on the right side of the market. In the next video, I'll cover points of interest, so how you can actually identify and trade these areas where continuations and reversals are most likely to happen. If you found this helpful, hit subscribe, drop a like, let me know in the comments what part of market structure gives you the most trouble. Thanks for watching. As always, this is Trader Main from Breakout. I'll see you guys in the next one.